we're going to obviously start with Starwood. What's gone wrong here? I feel like this was one of the high flyers, and Fritz von Passion leaves, and all of a sudden everything's falling apart and they need to find a buyer?
Yeah, sure. So actually the company started to fall apart much before Fritz actually left. And really there are two things I think they got wrong here. One was too much focus on international growth. And international growth worked until it didn't. We know that pretty well. So if you look at Starwood, is almost 2/3 international when it comes to earnings versus Marriott, which is only about 1/3 international or even lower actually. So I think that was one part that they got wrong in terms of strategy. The second part I think they got wrong was that they didn't really have good brands in the area, in the fastest growing area of our industry, which is typically the upscale segment or the mid-tier economy segment that we can think of. That is where really the rooms are growing. That's where Marriott's growing. That's where Hilton's growing. That's where a lot of other companies are growing. And Starwood did not have a very good platform to grow in that segment. There are only that many very large sort of Sheraton hotels or Westin hotels you can put in any city center. Eventually, you need to have sort of smaller brands that you can fill around the edges. And they didn't have that. Unfortunately, it became the slowest EBITDA growth company when you compare them with the industry peers.
Nikhil, shares of Intercontinental Hotels are surging in London, now up by about 6%, trading at a record high on this news that Starwood is considering strategic options. Would it make sense for Starwood to buy Intercontinental?
Personally, I don't think so. And I think there's been a lot of talk around some of the public companies, including sort of Marriott, Hilton, or IHG, Wyndham, trying to make a bid for Starwood here. I just think that's not the best way to realize shareholder value for Starwood, personally. Any of these companies would have to offer a pretty high multiple relative to where they trade to be able to buy Starwood. The other issue with Starwood is it's a slow-growing company, so if you acquire this, chances are your own growth actually slows down. And then the other thing here is that most companies are really trying to become more of managers rather than owners of hotels. Intercontinental has kind of stopped owning hotels, so has Marriott. Wyndham doesn't own any hotels at all. So if you buy Starwood, you're going to be basically stuck with a big chunk of hotels that they own, and you're going to have to figure out what to do with that. So I don't think, in my opinion at least, I don't think public company, any of the publicly traded companies are the ones that make a bid for it. I think it more than likely could be a sovereign wealth fund buyer. It could be a wealthy investor who would want to own this brand, not just for monetary reasons, but also for other reasons.
Well,
like
we heard Barry Sternlicht at Milken yesterday saying, look, if you're a sovereign wealth fund and you come to me and say, I'll invest $10 billion in the business, I'll go back and run the business for you.
Right.
So I guess that was not an unserious offer.
No, you're right. And again, I think at the end of the day, what you really want to see here is you want to see someone who can pay top dollar for this company. And in my mind, that has to be a sovereign wealth fund. I don't think any of the public companies can, quite frankly, afford that. And if that's the case, well, you could have, the last CEO, Barry Sternlicht, if he's interested in running this company, he can very well come back and run this company. And frankly, my own opinion is, I don't think anybody has run this company as well as Barry Sternlicht did.
What about the stronger dollar? We were saying that perhaps Starwood took the wrong turn by not expanding sufficiently international, but now you look at Marriott and Hilton, and they're getting bit from all the business they're doing abroad because of the strength of the greenback.
Starwood did too much international expansion, right? I mean, is that the problem?
That's exactly
the dollar?
Right. Yeah, that's exactly right. And one thing I would say also for Marriott, you're right, that most of these companies are also expanding internationally in a big way, but they're not abandoning their U.S. base. So if you look at Marriott's pipeline, more than half of that pipeline for the future is actually in the U.S., and less than half is outside of the U.S. So it's a very balanced approach. Unfortunately for Starwood, they left that path. Most of their pipeline went international. Even today, Starwood's almost 80% of what they are going to add to their hotels over the next 2 or 3 years is all international. It's all outside the U.S., and that's a problem. Clearly, when you have the greenback, that's so much stronger.
In the meantime, what does Starwood have to do? I mean, will they be able to invest? I stay at Westin hotels a lot. Some of them need a little bit of renovation. All of them need more water pressure. Are they going to do anything to build the business while they look for a buyer?
In my view, I think that's a harder thing to do, and for a couple of reasons. I think the time for reinvestment in this company is probably gone in a little way. The reason behind that is that investors tend to think of hotels as a textbook cyclical industry, and we may be a little bit later in the cycle here to be taking on those kind of projects. I think what they've announced today is the most prudent move, and I actually applaud their board to be able to say this, that they are ready to explore strategic options, and in my mind, at least, that makes perfect sense. It just makes perfect sense to actually explore a sale of this company. That's the fastest way to realize value.
All right, Nikhil, thanks so much for joining us. Nikhil Bhalla, there, VP of Equity Research, covering the hotels at FBR Capital Markets.